Hello and welcome back to Core Finance. I'm Matt Brown. I'm joined by Craig Erlam, who is Senior Market Analyst at Oanda. Thank you very much for coming on today. Craig, are you well?
Yeah, very good. Thanks for having me.
Right, we're going to look at all things FX today, and with the pound going from strength to strength for whatever reason, we're going to have a look at a few FX pairs, starting off with the pound against the yen. Bit of an uplift on the pound, sell off in a little bit in the yen as well overnight. Where's it going from here?
Yeah, I mean, the pound moves have been interesting because the initial move, I didn't think there was too much to justify it. The last couple of days, you could suggest that maybe there is an element of this higher inflation number yesterday. The Bank of England tomorrow, is there going to be more support for a rate hike, which would be bullish for the pound? To be honest, I don't think we'll see a rate hike tomorrow. Famous last words, I know. But I think the initial move actually came prior to the inflation number. Yep. So I do wonder what exactly it is that's really driving this sudden bullish feeling. It's certainly not Brexit negotiations. It's certainly not the economy. So it'll be interesting to see if it's got any legs, and that may rely on the Bank of England on Thursday. We've got the jobs report today as well. But in terms of the yen, I think this is just a reminder that we are just still long term. We are just range bound. We kind of broke below that 140 briefly, and it seems to be a false dawn. We broke back above there, and now it looks like we're headed back towards the kind of 147, 148 levels. I'd be surprised if we've got the momentum to take us through there, barring a rate hike tomorrow or at least a couple more votes towards a rate hike. So say a 5-4 vote, yeah, that may be enough to take it through, because that would suggest the chance of a rate hike this year have increased. But in the absence of that, I just can't think of what would give the pound the legs to take it out of this long-term trend, because fundamentally nothing's improved.
Understood, and that's dollar yen. So looking at, moving on to the next slide, well, cable, an uplift as well. Is this sterling strength or dollar weakness, or a combination of the two?
I think it's a combination of the two. I think across the course of the year, it's probably more dollar weakness. We've seen the dollar fall basically since the start of the year, and it hasn't really found its footing yet. It's probably one of the most one-sided trades I've seen in a long time, to be honest, which makes you worry about trend exhaustion. When everyone's on the same side of the trade, it is typically a sign that maybe the trend's going to come to an end. But at the moment, the pound seems to be driving it in the last couple of days. It's taken us through 132, which was a bit of a surprise. We had a break of 132 previously. It never managed to hold on to it, so I was wondering, well, is it going to hold on to it now? But really, it was the rally in the few days that led up to that 132 test that was the real kicker for this, because this is the one where you're like, well, this actually now has the potential to break. We did get above there. The inflation data again yesterday helped. It wouldn't surprise me if we are looking at 134.50 to 135. I can't see a move above there at this moment in time. Like I said, I don't know what's entirely driven this recent surge in the pound, but to go through 135, I think would take something far more substantial, and I think that would come from the Bank of England, again, nearing an interest rate hike, and even then, they may reach its upper limits around the 135s.
I mean, we have had this week, there's been a lack of data points globally, bar the UK, so it feels like there's been a lot of focus now has come onto the pound, and certainly the beats yesterday, but as you rightly say, the moves happened pretty much before, but continued the momentum afterwards, after we saw the inflation beats. That could be one of the key things. I think probably FX traders now coming back from the summer and having all these key data points has probably driven.
It certainly puts it more. It certainly brings it more to the forefront, especially at a time when we've had geopolitics being such a focus over the course of August. US politics prior to that, the Trump administration, people leaving, concerns here. So these fresh data points has brought it more to the focus, and I think the fact that the Bank of Canada maybe raised interest rates for a second consecutive month last week has maybe just brought again this joint effort, this coordinated move that we saw a few months ago from a number of central banks becoming more hawkish. Maybe people took this as a signal that the Bank of England remains more in the hawkish camp than maybe the voting would suggest, and the inflation data yesterday just gave it that extra little lift. Who knows? I think the test will come tomorrow. Let's see how they react to the Bank of England. If we see a 7-2 vote, then I think 132 is coming back under pressure, for example, in euro dollar, and it wouldn't surprise me if it breaks back below again.
Understood. And we've got a final slide here, which is the dollar yen, which has been in the range. Where does it go from here? This kind of 110 anchor handle seems to be a key level. Up or down?
Yeah, I mean, to be honest, I think the most interesting thing with this is we broke below 108 finally. It's long-term support. Again, like sterling yen, we've been in this kind of long-term sideways trend. We've had a broad range, but we keep testing the tops and bottoms, but we just keep going between the two. We finally broke below 108, but I mean, you've got to remember this is almost a danger pair because you've got the weakness in the dollar, but you've also then got the yen safe haven flows. So when we started to see these geopolitical risks unfolding and increasing, then that was naturally quite bearish for this pair. So we saw that break, and as soon as that subsides in any way, we've had this very sharp rally higher. This isn't a reflection of people being bullish the dollar in the last few days per se. This is a case of, right, as this risk-off attitude starts to subside, then all of a sudden the yen loses its appeal. So we've broken straight above 108. I wanted to see a break of 109 for certainty. We've seen that with ease. So while we've seen the breakout, I don't think it's anything substantial. I think we're still range-bound here. Like you say, 110 is a notable level. That's where we're kind of trading at right now. 111 above that, I think, is interesting. We've got the Ichimoku cloud coming back into play. This is a bullish-bearish divider, effectively. But ultimately, you could be looking at 114.50 again in the next few months. It wouldn't surprise me. And let's be honest, the dollar is long overdue a correction after what has been a pretty torrid year for the currency. And assuming we don't see more escalations, more hydrogen bomb tests, missile tests, which we may see one or two, but as long as we don't see it develop any further than that, then like I said, the yen loses its safe haven appeal, and once again we're looking at the central bank, which has currently shown little appetite to tighten its monetary policy, which is one of the few central banks to not be doing so.
Understood. Well, speaking of central banks, all eyes to the Bank of England tomorrow. But in the meantime, Craig, thank you very much for joining us today.
Thank you.